Good morning, everybody. Siobhan, I know you're ready to go.
Good morning, Chris. I'm ready to go. I don't know how Elaine dropped suddenly.
Yeah, good morning, Shivam. Yeah, I am excited about what you're excited about. Well, we're going to get into
Man, I
that.
was excited till I heard the Suez Canal
Morning,
losing.
everyone.
Okay.
I mean, I actually think the whole Suez Canal thing is hilarious. Like, just imagine you accidentally fucked up parking your boat. I thought that's what tugboats were for. Like, I do know how maritime works a little bit. There are little boats that pull these big boats through these little things. Like, how did they fuck this
Oh
up?
my God.
It's like
I
parking with
don't
an
know, man.
assistant. All right, okay, hold on. We've got a way to do things here.
While
I'm.
we're waiting, ping some friends into the room.
Are y'all ready? Are y'all ready for this?
I don't think they're ready, but they're going to have to be ready.
Of
Let's do it.
course,
Let's
we're
do
ready,
this.
Elaine.
Ladies and gentlemen, brothers and sisters,
This is a journey into sound.
the fattest, funkiest tunes in town.
Damn, son, where'd you find this?
All right. Good morning, everybody. Welcome. My name is Elaine Adams, aka Stock Mom, and it is my pleasure to welcome you to the Stockhouse U pre-market show. This is a show that's designed to help people get ready for the day. If you're in stocks, if you're in economics, we aim to give you some information that's going to help give you an edge. What do we do here? We do top-down analysis. We look at futures, indices, ETFs, individual stocks, news. We talk about our trades, both good and bad, and trading psychology. If you want to hop up on stage and add something to a part of this conversation, please raise your hand. You're more than welcome. Ping some people into the room, even. Definitely add this club. We don't give financial advice. We're just a group of friends, and we don't tell you how to trade, but we can help you understand why it is that we take these trades. I'm joined by some of my favorite people: Siobhan, Christopher, Liv, Vanessa, Alec, Marcus, Kit. Welcome. And hey, Patrick, welcome to the stage. Normally, we like to start our days off with a quote, and today I will start off with one. My quote is from Bernard Baruch, and it's fairly simple. In trading and/or investing, it's not about how much you make, but rather how much you don't lose. And that ties in quite nicely to the title of today's show. You don't know what love is. I feel like so many times people describe love and people get into things because of the good side of it, right? And in a long term relationship, we know that you get to see the good, the bad, the in the middle, the morning face, the I'm too tired face. There's so many things that really go between like loving somebody truly. And that's kind of how I feel about the market. I love the market when it's terrible to me, when it's amazing, when it trades sideways, even though I know that all these damn companies have nothing but sweet catalysts. I'm looking at you, Apple, AMD, whatever it is, the tenure, what's going on. Uh, and at the end of the day, I love it regardless. And furthermore, my goal, it's not really about how much I make. It is to just be consistent, right? So even if I do have losing days, that's fine. We're supposed to have those. That's perfectly fine. But I just want to limit those losses. I want to limit that mental headspace, and I want to stay in active love of what it is that I'm doing on a daily basis because that's why I'm doing it. I could do other things. You all could do other things. But we choose to come and be in this market, and we choose to come and listen to this morning show and get ready for it. So That is my take, and that's where I'm at today. Shivam, do you want to start us off? You're in the top billing today. And good morning.
Absolutely. I think I was on mute or something, so my bad. I can start with a quote, and once we get into the other segments, I'll tell about my losses. The quote today is learn every day, but especially from the experiences of others. It's cheaper.
I love that.
That's
Um, and I'm
self-explanatory.
actually going to tie it into like our accountability partners that we talk to on a daily basis. And honestly, a lot of it is you guys. So I'm taking my quote and tying it into accountability partners and how we hold each other accountable and make each other better again. Anyway, confidence comes from being right, not from being right, but not fearing being wrong. That's Peter McIntyre. I wanted to bring that up because I feel like we have a lot of back end conversations. I mean, Elaine gets mad about being wrong, about yelling, speaking, even if she was only an hour wrong and people make the simplest mistakes. She's like, nah, don't let me get up here and sound like an idiot. Like hold me accountable to that stuff. Like you guys, it's not just me up here. We're a team. And I just really appreciate the fact and I feel the same way.
Good morning, Liv.
Good morning, everybody. Hopefully, everyone's doing great today. So, my motivational quote is people often say that motivation doesn't last. Well, neither does bathing. That's why we recommend it daily. This is why we do these quotes. I'm sure some of you wake up completely tired and don't want to be here, but hearing these every day will most likely jumpstart your day. Good luck trading, everybody.
Was that Ziegler or Churchill?
Ziegler.
Well put.
Love it.
Good morning, Vanessa.
Good morning, everyone. My quote for today is on particularly rough days, I like to remind myself that my track record for getting through bad days so far is 100%, and that's pretty good. We're all here right now, and we're blessed to see another day. And even though, sometimes we have hard days, you do have to see a little rain to get the rainbow. My name's Vanessa. I'm done speaking.
Alec, Marcus, Kit, Patrick, and coming up to the stage, AR. Good morning, everybody. You guys can just say hi and good morning, or you can throw out a
Good
quote.
morning, everyone. Yeah, I
No.
actually have a quote today. I know I normally don't, Elaine. Small, consistent effort every day will produce far more than random explosions of energy, which I think relates really well to trading too, because I think sometimes we all get caught up trying to get 100% gains, but I think it's important to take the small wins too, the base hits.
I love that. And also, if you guys don't follow Alec on Twitter, he's all motivational and shit, pretty much on a very consistent basis. I appreciate reading his Twitter. So
Thank you.
thanks for the quote today, man.
Good morning, everybody.
Good morning, Kit.
Happy Wednesday? Yeah, Wednesday. I've been out of it because I've been traveling. So my quote for the day is your sum is greater than your individual parts. And that stands true for your portfolio as well as the people that you engage every day. People trade alone and then they have a lot of pitfalls, especially a lot of people who are really just starting out. But when you are like us, we take all of our individual parts and we pull them together. The wealth of information and knowledge that we grow, here daily, which is why so many people come, is how we become greater. So just remember, the sum is greater than the individual parts. And happy Wednesday.
Absolutely. The whole collective aspect of this trading community and Clubhouse in general has overall added. And I do appreciate like kind of just drawing attention to that. So thanks, Kit. Wow. AR, Fahim, and Daniel, you all made your way to this stage too. Do you guys have a quote that you want to share? Just say good morning.
Yeah, this is Pat. I do have a quote, and it kind of goes along with our red days and what we're all here to do, whether it's on Clubhouse or in the individual stock groups that we're all in.
Go
But it's
for
by
it.
Jim Rome. It's Formal education will make you a living, but self-education will make you a fortune. And I kind of feel like that's what we're all here to do is self-educate on different stocks, talk about losses, understand that, on red days, it's not, you can feel like just you, but I can assure you, in my stock group, I knew yesterday it wasn't just me. Uh, and it just sort of lets you know that as a collective body and a group, we're all here to support each other and get through the red days and then tweet as many diamond hands emojis as we can on the green days.
Patrick, this is the first time I remember seeing you on the stage, and you are absolutely welcome. That is a banger of a first time quote, man. And I totally agree with that. Well, with that said, though, let's talk about some futures. You know what I'm saying? Okay, but seriously, the Nasdaq. First off, we closed yesterday at 1306, and we're up today at 13,092. I think that it's ironic that we're sitting basically in the same place that we were yesterday. And coming up against some of the same resistances. And really, honestly, I sort of have the same feeling as I did yesterday. Um, Yesterday, I talked about a resistance basically sitting directly above our 50-day moving average. And that 50-day moving average is sitting at 13,094. And at the end of the day, we did not break above that. And so this starts to talk about a little bit more about, how do you really judge a retracement and how do you look at that between bearish and bullish? Well, when we're not pushing above our moving averages and continuing to sort of hold below those and using those to form resistances, that to me feels a lot more bearish. And I'm going to caveat this by saying I come in here basically every other day and have a different sentiment. Sometimes I'm feeling bullish, sometimes I'm feeling bearish. It changes day to day. It could change second to second, right? And it really is totally just based off of breaking supports and resistances and how we establish our candles in terms of having inside days where we do not break outside of a previous price and outside days where we are breaking past the previous prices that we got stopped at on earlier days, weeks, months. And then moving towards all-time highs, which obviously changes the game as well. We obviously had a huge uptrend that really started from March, but the current pattern that I'm looking at, or I want to talk about, started in November of last year, and we had an amazing run all the way until February, where we had two really, kind of big pullback weeks that have taken us to this kind of consolidation phase. We've had a fairly large pullback. It wasn't the massive market crash that everybody was saying, but we've been in a consolidation, and we're trading like inside of a range really. And that range for me is between 12,700 and 13,300. And even inside of that, we have been trading underneath this 13,100 level for the past 4 days now. I would love to kind of come up against this 50-day moving average and have a break up to the upside. We have been continuously moving up in our NASDAQ charts. We have seen big tech stocks, start to recover and have a little bit of momentum. We're definitely seeing good catalysts on that side. So I'm hopeful, but these are the levels I want to see so that I can say I'm ready for that next leg up, right? And getting past this 13,100 resistance point is just going to take us right up here to the 13,300. And do I expect us to constantly just break through resistance? No, but this is what I'm looking for in terms of bullish momentum and how do I describe it and how can I characterize it? It's that. On the downside, if we break through this 12,700 level, my next leg down is looking at 12,355. Moving on over to the S&P 500, we closed yesterday at 3,899. We're sitting at 3,914 right now. And this storyline, as I said, just has been different because we were at all-time highs in the NASDAQ last week, right? So this pullback that we're seeing here is a little bit more expected for me, and we are consolidating near the upper range of the space that we've been trading in for quite some time. So the range that I have for this is 3,930 as a top line, and then 3,862 as a bottom line. And I don't know if you guys have noticed, but these futures correspond fairly directly with the indexes or indices that they're meant to represent. So like if we talk about the S&P 500 futures and I say, the highest that we've been is 3,979. And then you look at like SPY, and then you'll note that like the all-time high that we had on SPY was 397 point whatever nine, or I think it was 398 actually. But they correspond fairly similarly, I guess is the point, right? So I don't know, there it is. So this range that I'm talking about in terms of trading in our S&P 500 futures, which is just a little bit clearer on this chart sometimes than it is in SPY, fairly correlates with what I've talked about with SPY, which is 391 to 394. But in the S&P 500 futures, it's a little bit lower in terms of what I'm expecting in the range that I've been seeing us kind of trade in. And so for the S&P 500 futures, it's 3,936, which is very close to 394. And then on the downside, I'm looking for like 3,878 would be the ranges that I'm really deep into and wanting to see us hold this consolidation pattern and stay in here. And it's nice when we see a consolidation that balances towards the upside. Yeah, when we see a consolidation that holds towards the upside, this is a potential for a break to the upside. And it's called a high base pattern, right? And you can look this up and look at the statistics of when you see a high base consolidation forming, the percentage chance that it's going to break out to the upside is a little bit higher than downside. That doesn't mean that it's going to happen for sure, but it is what we like to see. And then last but not least, because I know I'm rambling, I just wanted to talk about the Russell, which is finally having a good day. The Russell up an entire percentage point from its close yesterday, closed at 2,180 and it's sitting at 2,202 right now. And I don't even have to look at the chart to say that we've been trading in this 2,200 to 2,300 range for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks at this point. It's been some time, and here we are sitting very close to the bottom of that range at 2,202. So just going off of the chart and how this thing has been trading, I actually could expect a nice update. We're hitting that demand zone where people are comfortable buying, and that's what I would expect. Now, the Russell has had two very strong down days, and it's been the lagging index in our market for some time, and that's okay. Small cap stocks don't have to move in tandem with our large mega cap stocks, right? There's only so much money and there's only so much attention to be spent. And I'm happy to see some of that rotation right back into the growth side of things on a mega cap side. So this is sort of what I'm looking at. Anybody else have a major index futures take, or you want to let Chris talk about some oil for a second?
Just seeing that head and shoulders formation in the S&P, like you were saying, giving way to that resistance and looking at that support of that 38.6 around that 38.60 mark. So yeah, just definitely gonna be watching that closely. Chris, after you.
Gotcha. Did anybody else wanted to jump in on futures? Shivam, AR, I know you got, well, Shivam,
I'll jump just in a minute, Christopher. Just in a minute.
I just want to point out, Chris, this is Pat. I just want to point out the VIX. The other day we closed for the first time below 20. I believe we closed at 19 and change. I don't remember the exact number, but I just want to point out that since then we've rebounded all the way back up to 24 one day, and then I believe right now, let me just refresh it. And right now the VIX is back down to 22.33. And even though the VIX is low, I just want to point out the erratic movement in it shows that while in theory, I guess the volatility is supposed to be low, that those big 5-point swings in a VIX from below 20 to above 20, given that 20 was a big deal for us to finally cross, just shows as everyone's been saying, the market's been a little erratic as of late, and looks like it could continue that way for a little bit longer.
I think that's an excellent point, Patrick. I talked about that level in volatility yesterday and had a mediocre trading day, but volatility was the place where you could have had a fairly simple trading day. When the stock market is going crazy, that really is one of our key indicators, and you hit it right on the head. And I think I want to call to that too. we have had some erratic trading days and just some really, volatile price action. But looking at VIX at these levels and watching what it's kind of done fairly consistently when we're hitting these levels, and kind of spiking back up and falling down, I don't know. This is a tradable pattern for sure. Until we see something different out of it, it's something that I'm going to be looking for specifically today, to be honest. So thanks for that.
Yeah, I mostly trade options, so the VIX is really important to me just because it determines, strike prices. If you don't have a lot of volatility, even if you're going $5 out of the spot price of the stock, um, if you don't have the volatility, that option is not gonna print anything for you but red. So for all options traders, or if you're new to options trading, just keep that in mind. Um, the VIX can really affect, and just volatility in general can really affect the profitability of even something that's considered at the money or very close to at the money.
Facts. Hey, AR, do you want to talk volatility with us?
Yeah, I'm sorry. Yeah, I concur with what everyone has been saying. Um, yeah, right now for me on the VXX, um, uh, yeah, I have a support line of 1196. Um, as of as of Monday, the low was 1185. So normally you normally that 1185, which is like an all time low for the VXX, you would have expected that corresponding high, right, for Monday. But as you can see, things that wasn't necessarily the case. So volatility is definitely definitely in these markets. I totally concur with everyone. What I'm looking to do, or what I'm looking to see, is will this 1190 line basically hold? And so far as of this morning, it's a yes. But you know, volatility again is still the ongoing theme, and who knows for how long.
And like just to draw a parallel for people who don't know, it's like pick your volatility index. I don't know. I look more at VIX, like the VIX, and it's like before last year March, the thing was sitting around like $10, $11 on a fairly regular basis, and now it barely goes under 19, right? So like we have this increased and raised sustained volatility, which really does add some characteristics to the market that we're in that are not normal, or they're creating a new normal. And sorry, Christopher, go ahead. Let's talk about crude oil.
Oh, we're fine. We're fine. I'm glad we actually got to that. So big news that's going on right now with crude oil. So there is 10 tankers carrying 13 million barrels of crude oil that could be affected by the Suez Canal blockage. So there's this huge tanker blocking 13 million barrels from getting out of the Suez Canal. So that is affecting, of course, the supply. And we know when supply becomes limited, prices shoot up a little bit. So yesterday I spoke about the 57.75 low level, and we see it bounce off that 57.76 due to some supply issues that are going on right now. What I'm not sure of though is because the last time we were actually above this 54 level, which I was saying it could break into those lows from February, which was down to the 52 level if it was continuing to go down, if it broke that 57 support, then we were going to be moving towards the February lows, which were the March lows or the March highs from last year. Um, and so right now I'm thinking we're getting a little bit of a fake out. The supply and demand issues might be resolved once this tanker gets moved out the way and these 13 million gallons of barrels of oil can be moved again. But as for right now, we got a small, slight climb position up 1.7% in oil right now due to the news. I don't know if you want to go over Fandango Lane right now, but I think we're going to do that this afternoon. So I'll leave it there.
Not Fandango.
Definitely Fandango.
Oh my God, he said Fandango. So and the oil story is an interesting one as we kind of just had this uptick in demand, and looking to return towards pre-COVID levels. And at the exact same time, we also have, I mean, I think one of the huge things that affects demand and just our oil energy kind of sector and how we interpret that has to be reopening. And the ongoing evolution of these new COVID variants and upticks in viruses, and upticks in quarantining and stuff like that going on in different countries and potentially in America. So that's something that I'm going to be looking for. I mean, there's a ton of value to be had in this sector, but it really is dependent upon having that need because people are going to be traveling, which could technically be affected if we do go back into lockdowns or we even have the scare of people, of going back into lockdowns and we just slow down our reopening. That could have a drastic effect on where we see oil prices going, even towards the summer. So it's something I'm thinking about as well. Anybody else? You guys trading oil?
Did you guys speak about the that shipping container that got caught in the Suez Canal? I'm sure you mentioned that in terms of the oil spike.
Oh, for
Yeah,
sure.
yeah, we definitely did. But if you want to give your take on it, go ahead.
No, I was just going to make a thought on just what else to look at this week. Obviously, we got the Powell and Polson testimony, excuse me, Yellen testimony yesterday, day two today. But the durable goods orders. I don't know if you guys had talked about the durable goods orders here that came out at the bottom of the hour, really weak. And these were orders, not necessarily shipments. So I think that might be kind of an opportunity to take pause on this rotation trade. Then we're going to get core PCE on Friday as well as CPI. And then, of course, next Friday, we'll get the jobs report, which will get some wage inflation data and help, kind of clarify this picture on inflation. So a couple interesting catalysts here the next, half week to 2 weeks. So that's kind of where my eyes are. I'm looking ahead to Friday, interested to see this PCE number come out, and then next Friday, NFP report. But the Yellen and Powell testimony, hopefully today they can manage to do the dance like they did yesterday. I mean, we did sell off a little bit post comments. I'm not sure it had anything directly to do with those comments, but those are just some of the catalysts I'm looking for because otherwise we're at the tail end of earnings season. I'm not sure what other catalysts we can really look to at the moment, but Elaine, I know, and Christopher and all you guys, we've talked about this. I think we can reasonably expect a lot of chop sideways. The VIX has come in, we're closer to 20. Hopefully we get another close under 20, but I think the market wants to see some clarity on this inflation issue and probably takes a little while to get there. So I think we chop sideways before we make a leg higher.
Oh, definitely. And yeah, great on talking about the durable goods orders. So I've been doing these morning briefings and putting them out on Instagram and Twitter if you follow me or Stockhouse U. And part of it has been starting to just add an economic calendar and talk about these economic indicators that get put out by different organizations, whether it's the National Association of Realtors or the Census Bureau or whatever it is. I know a lot of us who are in the market and kind of sit here every day, it's something that you're used to seeing and used to talking about. But for people that aren't, or you're trying to, just get a leg and see what is it that people are reacting to? On a daily basis, there are a series of economic reports and indicators that kind of come out and it's consistent. It's cyclical. So every single month we talk about CPI. Every single month we're going to be talking about I don't know, durable goods, whatever it is, right? These things are updated on a consistent basis. Same thing with all the crude oil, stock updates, all of that. And I've been trying to just put it out there. So every day, there is more than just one or two things. Today, we have something that talks about mortgage applications, durable goods orders, market composite PMI, market manufacturing PMI, EIA gasoline stocks change, crude oil stocks change. And I'm not going to give you guys all of the things that are happening on a daily basis, but I do think it's important kind of just to find some key indicators every single day and just get an update. These things really will give you a little bit of a better beat on what's going on in our economy from a supply or demand side in one specific sector and hopefully give you a little bit more direction on, where you're going inside of the market. And yeah, today we had durable goods that came in and it was low. And that is definitely indicative of what's going on in the past, month, Ben, in terms of just orders going on. So once again, I do think it's valid.
Yeah, I think it just could put a pause on this rotation trade. So I think the market wants to see some resolution to the issue, and obviously yields have kind of cooled off, which is good to see. So some of these yields are catching a bid. By the way, there's 5 and 7 year auctions this week as well. So a lot of eyes on that stuff. But yeah, the market's really nuanced right now. There's really no discernible uh, trajectory. So I do think we want to see some of these issues resolve, and kind of makes it's not as exciting to trade this market, but it's going to reward those that properly study these issues, Elaine, and position themselves appropriately.
Ben, can I ask a question?
Yeah. Hey, what's up, Mohammed? Good to see you, brother.
Good to
Hey,
see you.
Mohammed,
Are
but it
you
is
looking at
30
any?
seconds or less.
Are you looking at any emerging markets?
Yes. I like Brazil. I know they're having an issue right now with COVID, but they did take price, meaning they boosted interest rates, which I like. I also like Korea, and I like Japan. That's my quick 15-second answer.
You call Japan emerging market?
Well, no, but I mean, just in terms of, I guess I shouldn't call it emerging market, but just in terms of international. But certainly Brazil is, I think, the big opportunity for emerging markets right now.
Love that.
Are you investing in Brazil on a macro level or a specific industries or stocks?
I like
natural gas.
Yeah, I mean, certainly, yeah. When it comes to materials, natural gas, obviously, without question. But also as an emerging economy with e-com and cloud, it's an interesting space to think about.
Ben,
Sorry,
some
what was
love
the last
for
thing you said,
Southeast
Ben?
Asia.
Yeah, Southeast Asia, I agree. I think Southeast Asia is another great place. And then again, some of this, the Korea stuff is interesting. But again, Japan, if we don't want to classify that necessarily as emerging market, I think there's tons of opportunity in Japan. If you look at the Nikkei 225, I mean, Jesus Christ, talk about a bull case.
On fire.
Yeah, that thing's been on fire. Yeah. And the crazy part, though, is if you compare it back to those who bought the peaks back in the 80s, they're just now breaking even. So it is about time that thing rotates back into a bull posture. But yeah, I like Southeast Asia. I like Latin America. I'm not quite as sold on the African plays just yet, but I think those are some areas to look at.
Yeah, Warren Buffett timed Japan perfectly.
Okay, sorry. I don't
sorry,
mean
guys.
to interrupt, but what we can do is open up another room after this because we're on a time schedule before the market opens. Go ahead, Chris.
No, I was just getting ready to say the same thing. At 9:05, we got to move into SPY and volatility indexes and things like that. That's all.
Hey, actually, do you guys want to do that new segment that we talked about real quick?
We can.
Shout out to y'all keeping on schedule.
Should I introduce
This one is called "You Must Hate Money," and it's like based off of this joke that we kind of say to each other in the back and like on the back channels, and it's just like, why did you trade like that? You must hate money. Or why didn't you trade like that? You must clearly not like making money. I will go first. This is just for us to explain maybe opportunities that we might have missed out on based off of faulty logic or just an inherent bias. And I am proud. Well, I'm not proud. Who am I kidding? Yesterday, and for the past 2 days, Christopher has come in here. A lot of you have come in here and smashed me in the head with your NFT stocks. And I've called it gambling, and I've been so dismissive. Who trades on that? No real traders thinking about it. Elaine, you're stupid. Yeah, I said it. The NFT stocks were on fire yesterday. And had I been looking, I would have had an amazing day. So congratulations to everybody that did it. And apparently, I hate money.
Let me
Elaine, I'm with you. I was right with you. I felt it, and I watched all my friends yesterday make money, and I just sat there saying, I must hate money.
let me plug in our Discord right there, because I did call that out at 5 something a.m. The Dolphin stock, which also ran this morning once again, that I also called out. So all of you suckers that didn't get any part of that stock, shame on you. And I guess you like being broke. Also, I genuinely feel very sad because I was saying that the market was going to turn down. I've been saying it for a while. I got SPY, but I'm just looking at Boeing and the amount of money I could have made from 261 puts. And I hope Shanice is somewhere just making money. Anyway, that's it.
By the way, on the NFT equities, there's this company called TKAT, Taku
Oh, it made
R.
the list yesterday, Ben. Oh, we
Yeah,
definitely wrote it.
and you saw it absolutely buked post, aftermarket, and then this morning it's down another 15%. So a lot of these things are super volatile, so they might be fun to trade. There's another one that Jason Rasnick from Benzinga mentioned to me that's called HOFV. I don't know if that was on your radar as well. But
He's
those are
riding Marcus's play. Marcus
No,
called it out last week.
they've been talking
Yeah,
about
in
it,
and
Ben.
out.
They've been talking about it for probably a week at this point, and I was so dismissive because I hate money.
Yeah, it's crazy moves though, just crazy wild moves. So it's interesting place to tactically trade.
Right, definitely a place to trade. The volatility inside of that is high.
Speaking of that, my name is Chris, and I must hate money because I let go of SOS to find out they're jumping into the NFT space this morning, and now all cryptocurrencies are back running again. So, my name is Chris, and I hate money.
I think you guys all hate money. I've been talking about Lending Club for the last month.
He has been talking about Lending Club. Also, there was another person in another room who keeps talking about Waste Management. Waste Management had a great month. Yeah, it is just funny. All right, I got time for one more. Anybody else have a story to share? And then we can kind of move on because we do need to talk about the sectors.
I hate money. I lost $31,000 yesterday across all the plays I made, all ridiculous. You say Disney, I did it. You say Boeing, I did it. You say SPY going up, trying to be bullish, Shivam, for the first time in an entire week, I got burned. Yeah, everything was wrong. Everything was red.
Daze once said, "Everything passes."
Yeah,
Oh, man.
absolutely. And more importantly, you know what? This is just a place for us to come and commiserate, but also learn from that. Do you think I'm gonna not be paying attention to NFT stocks ever again? Absolutely the fuck not. Those things are right on top of my radar, just like everything else that's piping hot will be on my radar, right? So I don't know why I ignored it. It's just, anyways.
You're gonna be a Top Shot master soon too. Watch.
Yeah, for sure on that. So let's do a quick refresh and then let's talk about SPY and all of those things. Here we go.
Good morning, everyone, and welcome to the first place every morning you should stop to get your stock market news. That's right, I'm talking about the morning show presented by Stockhouse University. We are not financial advisors, and this is not financial advice. This is a conversation amongst friends that love talking about stocks and want to improve our profitability by coming here every day, talking about the market, relevant news, and how we're going to use that information to be profitable. We think education should be accessible and affordable to everyone, so we have a free Discord that has tons of resources and over 1,800 amazing members at all different skill levels that are also talking about the market, and they're trying to grow as well. We also do free classes on Sundays, and we would love it if you would join that community and contribute, because together we are so much more powerful than we are individually. Invite your friends, invite your family. Let's all create opportunities for generational wealth. Also, if you like the conversations that we have here, make sure to click the greenhouse on the top and join the community. We'd love to continue the conversations, and we would love it if you guys would contribute every time we're on stage, not just in the Stockhouse U family.
All right. So, hey, Liv, you want to talk about SPY real quick? Or not?
Me?
No, I was saying Liv, but go for it, AR. You can talk about SPY. I'll go with you. All right,
okay.
Liv, you ready?
You gotta live. Yeah, I am ready. Sorry.
Okay.
Okay. So SPY, the old nemesis, and I say that because every time that I think it's finally over, it's not. So, yesterday, like we had predicted, the areas that I was looking to get into was around 389, and that's where we were sitting last night. Now, I am not convinced because of this week that we are going to actually dip too low because Powell is pumping. And right now we're seeing a general support at 387. This morning I was expecting maybe a touch there in pre-market, but we didn't see that at all. As in pre-market, we are at 390.881 in cents. And I'm going to say our resistance level is going to be around 394.20. I raised it up a little bit, but we're going to be in this channel for a little bit. And I say this because, as Patrick was mentioning earlier, I notated the VIX. I was doing history on it during last week and noticing that it wasn't really like this. I wasn't really too keen on the VIX before all of this started happening during the pandemic. But seeing how it's very emotional, to say the least, and it fluctuates, I really think that if we are in a downtrend channel, it's going to be an expanded downtrend. It's not going to be as sharp as we had like experienced around the 3rd of March, where it just drastically dropped in a week because of the way that the meetings that we're constantly getting, all this news that's coming in, it's like the market doesn't know what it wants because with the retail investors hopping in between stimulus, there's new talks of a forced stimulus on the way. We have inflation rates like constantly above 1.6. We don't know how it's going to go. So before I was sure we were going to downtrend, but now seeing how Powell affects the markets, what if they talk for another month just casually and just to save the market? I don't know. But for me, if I'm going to go with the downtrend today, my entry would be around 388. And I would hope for it to touch 385. If I'm looking for an uptrend, I'm going to look for 392, and then I wouldn't bet past 394. Keep in mind, I've been noticing a trend that every morning that Powell speaks and such, the closer that he speaks to the market open, the market either pumps up, and the closer he speaks to noon or later in the market will dump first, and then it pumps up. So just something to look forward to. And that's Liv. Thank you.
I love it. I think you're spot on.
Hey,
And
one thing
yeah,
I'd
go
add
for
to
it,
Liv's
Brian.
comments, I would just say, Liv, add this to your watch list too, is the VVIX, which is the VIX of the VIX, and a lot of times that can be a leading indicator as to where the VIX is going. So it's an interesting derivative to keep on your watch lists. If you are watching VIX, I mean, because I have to trade vol quite a bit, VVIX is another one, interesting one to look at. The other one's Move Index, MOVE, which is the volatility in the bond market, which obviously is topical right now given the inflation concerns. But those are just a couple things to add to that watch list too, because just great derivatives that give you deeper insights into that movement, particularly volatility.
You said move. Mood. Sorry.
Yeah, MOVE, Move. Yeah, Move Index is the bond volatility options market, and then of course there's the VVIX, which is VIX of the VIX. Couple good ones that just kind of give you some leading indicators, particularly VVIX. I like that one because it generally does a pretty good job. Maybe call it 65, 75% of the time, gives you a sense of trajectory on the underlying VIX.
Yeah, I saw yesterday that during the close we had some strength in the return of the market for the S&P and throughout the indices across the board. So definitely going to look for that pump, but to stay within the range during the time that Powell is speaking, and of course speaking to Ben's point with the increase in the VIX. I don't see a breakout anytime soon, but I know that typically there is one in April, followed by a short trek down. So definitely going to take the opportunity to see where some value is right now. Go through some of the lists that I have and see how I can take advantage of that. Um, yeah, this is rough. Yeah.
All right, so I want to do a quick rundown of our sectors, and then we need to talk about news. So, and this can be really, really brief, actually. Let's see here. Industrials close at 94. Looks like we've been having a little bit of a downtrend after coming to an all-time high. And I'm wondering where we're going to find a base. That's sort of what I'm thinking about for this complete sector in general. We're up to 94.76, so a little bit up in pre-market. Energy, obviously up in pre-market, talking about what happened in the Suez Canal and just looking at the spot price of crude oil. They don't have to be tied together, but there can be some strong correlation. And yeah, up. We've also had a fairly large pullback in the past 2 weeks on energy, and once again looking to sort of form a base. At this 47 level potentially. And once again, yeah, energy is one of the places that we've found a lot of value when we do see those rotation trades going on. Tech closed at 131.05. It's up to 131.85 in the pre-market, and we're just doing a little bit of a consolidation pattern after a break from an all-time high about a month and a half ago. Looking at consumer discretionary, we closed at 165.71. We're down in the, we're sitting at 166.50, so up in the pre. And this has been just trading in a consolidation since January of this year so far, between this 162 and 172 level. So we're kind of in the middle range of that. I would kind of wait to see if we're going to hit the bottom and sort of hold that support or continue to, uptrend a little bit. But right now we're just seeing a lot of consolidation associated and with the chop that you see in the market. Consumer staples was the only sector that really had a great day yesterday, and you've got to laugh at that. It's not one of the more flashy sectors, but it has a lot of stable companies: Walmart, Target, Costco, and so looking at what happened yesterday. We closed yesterday at 67. We're sitting at right now at 66. I kind of expect a little bit of a pullback in the pre. When we see people, cycle even into these trades in the first place, I thought that was kind of amazing. And I am looking to see where we go here. I'm not sure if we're going to smack to all-time highs, but right. Currently, we did have a great green day, and we are on an uptrend for the past 1, 2, 3, 4 weeks. So there's something there to say for consumer staples. Communications has been just having a really nice uptrend as well. I know everybody who's holding Facebook or one of your favorite, social media sites had a great day yesterday. It is worth noting that we are kind of trending up. And last week was a little bit of a, almost a nice little doji situation that we have going on here. We really could have continued momentum based on what we're hearing, and also based on whether or not we're going to go back into lockdowns or we're going to have more of a reopen economy, and some of the great news that we're hearing in terms of 5G rollout and people flocking to these social media sites like Clubhouse is doing a lot to put things on the map and open people's eyes to the possibility. Materials has also been taking a little bit of a pullback after smacking on all-time highs last about a week ago, and right now we're sitting at 76.36. We closed at 76.10, so up in the pre, and always at a place where I'm just interested in because of what it's attached to, and what we can look at in terms of EV, in terms of just reopening trades again, and the infrastructure behind our power plays. And moving on to financials, which has been just trucking, just a bastion of safety. I think responding a little bit to the SLR exemption that got ended, or which will end on March 31st. I'm enjoying this pullback. These have also hit their all-time high, and I'm ready for some of the financial sectors to settle so I can look for more upside. To be honest, I don't think that this pullback is really significant of anything other than giving me a better buy-in price. And XLV has just been petering along. I'm really excited about a lot of companies in this sector. Sorry, the healthcare sector. But I'm really not seeing the movement right now. Last week, we barely had any movement. This week, we're not really seeing a lot of movement sector-wise, and there's nothing but great news. So I'm kind of wondering what's going on here, and when the lag will catch in for, just we've had some amazing FDA approvals. We've had some amazing just movements in the field of healthcare, whether it's from a insurance perspective, whether it's from a vaccine perspective, whether it's from a emerging, whatever. Chris comes in here a lot and talks about FDA approval cancer plays. So I think that that's interesting. And I always kind of just want to take a look and see what's going on with the sectors and what's up and what's down before I get into the market. And some days we miss this section, and it's probably the most important thing that I do in my pre-market check. So it's just important for me to say it.
Yeah, no, I think that's good. Elaine, I would just say this on healthcare. There is some pressure there just on multiples, right? And the inflation concerns, and going back to your point on financials, the reason why it's such an interesting play right now, again, not a sexy play per se, but inflation protected yield. You guys have heard me talk about inflation protected yield. I don't normally talk about hedging in terms of equities, but I do think that the financial space is a really interesting place to hedge right now, because if we do see further inflationary pressure and follow through with this PCE print and what we see next week with the NFP, financials is going to be a really good place to stay. So I do think of it as an equity hedge right now, more broadly. So I agree with you 100%. And might be a place to allocate.
To that point, I brought up this ticker symbol before, but OPY, Oppenheimer Investment Bank, they're trading still much below the book value, and really low PE and really good revenue growth. So I think it's a really interesting company in terms of financials.
What was the company, Muhammad? Sorry, and did they pay a yield?
OPY, Oppenheimer.
So, Oppenheimer. Gotcha. Okay, cool. Yeah.
Briefly, Mohammed, we do have a rule. If you shout out tickers on stage, you have to give us an entry and a price target.
Oh, wow. You're going to have to take a second on that one, Mohammed.
Go get out your pencil and paper.
I haven't really to me, it's just such a value that I haven't really calculated like a price target, but I think it could easily double.
All right. Well, now you know the rules, so we're going to hold you to it next time. And with that said, I think we're going to have to All right, briefly, Christopher, Shivam, Liv, specifically, but anybody else, do we have any news that we want to talk about that you feel like we need to hit before we get into our watch list?
Yeah, lockdowns are definitely going to be taking place everywhere else. French government spokesperson said the COVID virus is worsening everywhere in France.
Mm-hmm.
I'm definitely looking at that. Shavam is on another call. He wanted to bring up the fact that the DraftKings, I'm sorry, the March Madness gambling data should be out soon, and he's expecting that Penn and DraftKings are killing it. So he's got that out for his watch list. Yeah, I'll let anybody else jump in there.
Yeah, my boys that are into sports betting are going super crazy running it up right now. So I'm sure they're doing great.
Oh, we also have Ford and GM talking about they're stopping productions right now over the past 48 hours just due to continuation of shortage on the chip side. So, yeah, semiconductors to the moon.
You know,
So
also thinking about Amazon, like I seen something that's talking about Amazon facilities in Ontario under investigation for COVID-19 worker safety. And like there was news that like there's one state that unionized the Amazon workers, and I haven't heard really much talk about that since then. But I feel like that is a huge actual story. I mean, and I know that Amazon's like the shipping the goods actually isn't the most profitable in terms of profit margin, but it is where the majority of the money still comes in Amazon. So I feel like unionization will have a drastic effect on that bottom line. Um, yeah, Ben, did you have something you wanted to add?
And no, by the way, I mean, full disclosure, I mean, Amazon's one of my largest holdings, and they have faced a lot of headwinds recently. In fact, it's underperformed their broader sector. So, you know, there's seasonality sometimes to this particular name. But that wasn't the point I was going to make. I was actually going to piggyback off Christopher's point about news items. If you guys saw overnight, Angela Merkel from Germany actually apologized for entertaining the notion of a 5-day lockdown in Germany. She obviously, you know, mea culpa, pulled back on that. But Christopher's right. In France and Italy, there's, you know, some potential resurgence. It appears in Germany, there's political pressure still to avoid further lockdowns. I thought the Merkel piece was interesting, and again, gives the broader market pause in this rotation trade, in addition to the durable goods and everything else we talked about this morning. So yeah, I thought the Merkel piece was interesting and noteworthy.
I have one last question, and I know this is where we're totally eating into watch list time. I'm reading this article about Mexico's inflation surging beyond their actual ceiling that they were expecting. And this is basically what I think people are afraid of going on in the US, right? We expect inflation, but that people are concerned that basically they won't be able to control inflation once it gets to that 2% level. Ben, because you're really the finance person here, do you have an opinion about Mexico's inflation?
No, I think it's a derivative of the U.S. economy. So I think that certainly there's going to be disruption in some of these downstream economies, but I think the United States is where to keep your eyes focused. Again, Friday's PCE reading, CPI on Friday, and then next week's NFP wage, particularly with influence on the wage pressure element of that report. So yeah, I'm not too concerned about what's happening in Mexico at the moment.
But
And I
also
think
just about that, to
the
add something
central bank. Sorry.
No,
to
no,
Ben's
sorry,
point.
sorry, Mohammed. Let's have Siobhan go, and then we actually have
Okay.
to keep it moving. So no, I'm
I think the
calling.
Central Bank of Mexico had a very clear policy, right? Like 3% was their benchmark, and 1% is the tolerance level generally. So 4%, I think after that only they will interfere or something. And I think we are close to that mark or something. So I'm not concerned much about it, to be honest.
Yeah, agree 100%.
All right,
Yes.
you guys.
Oh,
We're at that time of day where we normally just talk about our watch list and what we're looking at for the market. If you're not watching anything, you're just sitting it out. I think that's important to share as well. I did not get enough sleep last night, so I will be sitting my bitch ass on the sidelines and just paying attention to everything. I'll be streaming the conferences, but I need to take a day off and just reset, recalibrate, and make sure that I'm ready to enter the market. So that's my watch list for the day. Shivam, what are you looking at for the day?
So I'm going to look out at three things, trying to learn from yesterday. So I'm going to look out at SOS just because of the NFT play. Hopefully it goes up. I'm secondly going to look at my Bitcoin plays, Riot, Ebon, all those names, just because if Bitcoin's again goes for a rally, that could be something good. And the third name which I'm looking for is Intel. Intel announced they are big spending $20 billion something to create a new factory, new establishment. And I feel those are the kind of catalysts which might end up giving the entire semiconductor industry a big boom.
Oh my God, yes. As a matter of fact, they did a like an Intel Fury, whatever. There's an actual webcast of all the things that was going on, as well as the CEO live tweeted stuff during that webcast. And I'm really excited about what's going on with Intel and their 2023 lineup. Although the articles have already come out talking about supply chain issues and that they might not meet that production date. So a lot to talk about with Intel. To be honest, I'm happy that you're talking about that. Christopher, what are you looking at for the day?
I was just piggybacking actually off of Shivam. So we've got the NFT news on SOS, right? But turns out Elon Musk is pumping Bitcoin, and not really pumping it, but Tesla now is accepting Bitcoin for payment. So you can now buy Tesla with Bitcoin. That came out today. That was the last piece of news I wanted to give.
Oh,
So I'm watching Tesla.
I might go back into the market. Oh God.
Yeah. So Tesla, Bitcoin, all that stuff's running. If we get anything around crypto today from Yellen,
no,
I mean,
Bitcoin
not
is
Yellen,
up
but
4% right now. Like it's up
yeah,
4% in
I'd be looking
pre-market, dude.
Mara, Riot, all that.
Liv, what are you looking at for today?
I'm going to be looking at my girlfriend's face and wishing her happy birthday. Good luck, you guys. Today trading, I'm not going to take anything. Bye.
That's a great plan. I love that.
That's a good answer.
Vanessa, do you have anything you're looking at for today?
Honestly, I doubt I'll jump in, but I am watching Westwater Resources, WWR, because they had some news this morning that they've met some production milestones. So it was like at $6 in pre-market, but I'm looking to see if it breaks above 620 for entry.
Yeah, all right. And we don't have time for everybody on stage because we talk too much. So I'm going to choose my favorite people. I'm just kidding. Let's go with Marcus. You have anything you're looking at for today?
You're going to hate me, Elaine. I've got two NFTs.
No, talk about it.
These are both catalysts. One's a movie company that's getting into it. It's CIDM, Charlie Indigo, Daniel Mary. They're currently at $1. They were $1.51. They're $1.88 right now pre-market. And the second
Yeah, I
one,
saw that last night. That was crazy.
yeah. Second one is Color Star Tech, another blockchain NFT play, CSCW, Color Star Tech, and CIDM, Synodem.
I love that. And let's go to, I don't know who, let's see. Alec, do you have anything you're looking at for today?
Keeping with, well, I guess to keep with some other people, I'm probably going to stay on the sidelines today, though I do like days like today to get some income at a discount is what I say. So some dividend producing stocks at a discount, but in keeping with the NFT trend, I like CNET. There's the ticker is CNET. There's a lot of rumors that that is it going to be a NFT stock. So dividend stocks for me and maybe some NFTs, but other than that, just watching.
Oh man, the dividend stock room will be lit. Okay, with that said, you guys, I want to get into some affirmations. And no, thank you everybody who came on stage. I'm sorry I didn't get my timing right. But we'll do better. So here it is. Because we need time for gratitude. Giving thanks is such an important thing for me and my mental health. So I'm thankful for my health. I'm thankful for this opportunity to be in the market. I'm thankful for my account because that's the ticket to the show. And I will always protect my principle. I will not trade based on fear. Every trade will be conducted with a plan, an entry, an exit, a stop loss. I am focused. I know what I'm doing. I will wait for confirmation. I move as somebody who is successful in whatever it is that they try to do. And at the end of the day, I'm happy to be here. And I'm grateful for the opportunity to make generational wealth, not for myself, but for the people that I love and care about. Hope everybody has a great trading day. Thank you so much for coming in. Thank you for sharing. Thank you everybody in the audience. please add the club. And this is Stockhouse U, and we are out of here.
I'll stay blessed.
All
See
right,
you, everyone.
everybody.
Have a
Have a
great
good
day.
day.